Good. So let's get to it. So one thing that helps us is also, so this is the section 2 for we trying to learn how to find a context for a trade setup. We discussed in session 1 that we first need to identify a swing structure, and that will help us ascertain our bias. Within that range, we'll be learning to find our swing lows and swing highs. And then we will look for liquidity, the reasons why price will draw to certain directions, and then we will find our entry confirmation with sometimes with the help of our discount and premium zones and liquidity sweeps and also other confirmations that we can get. But we said before all this, we first need to understand market structure, how to use the fib, and also understand what liquidity really is. So these are the things, basic things that we are trying to understand in the most basic way. So in this session 2, we are using this pair as an example. And if you don't know how to draw trend lines, I mean, so trend lines helps a lot. So a trend line is a diagonal or it's a diagonal line that we can draw to guide trend line guides and guards the flow of price action. So guide, fine, but to guard, not always. It guides you to see the flow of price action or a trend, but to guard it means it will protect it always. No, most times trend line will break and price will still be going in the direction or in the trend. So, but sometimes it will guard it. For example, here it's guarded. It's guiding us that we are moving down, but here it guarded it. Here it hit it and then dropped, which means it protected it. Here it protected it. Here it broke it, broke it, broke it. We are still above it. All right. But if price is to continue down, move into it again and continue down, then it means it didn't protect it well here. Okay. And there are other things up here why price is still dropping. So it's not always that when trend line is broken, then we are reversing. No. If you are trading only a trend line strategy, you need to use other things as confirmation. So when you are able to find 2 or 3 touches, okay, okay, 2 or 3 points that can serve as a good area for you to have your trend line. I can also draw another line up to this up here because we are still bearish from the top here. I'm only drawing from where I'm seeing. Okay. So just find 2 or 3 touches and that becomes your trend line. So this trend line is really guiding or guarding us. And trend lines also serve as horizontal supports and resistances. So when you draw it like this, it will serve as support. Okay, find 2 or 3 areas that the line you draw can touch. Don't force it. That's it. So at the up, down, it will serve as a resistance. Down, up, it will serve as support. So when it's broken, you know. Okay, so even from where I sit now, uh, see the moment this area broke, we see price moved up, came back to test it as support, and then moved up. And then it came back to hit it again here as support and still rejected to the upside. So it works. when we say it guides and helps us or protects or you is it can serve as support and resistance. Okay. But notice that is not the only strategy you can follow. So now the trend line, we hit it again, it pushed up here, and this time we broke it. So if we break it, if we are able to close above it here, there's a higher likelihood that from here we'll be targeting the next protection or guide here, the next line here. Okay, if we are able to break above or price moves up and closes above it, there's a likelihood we'll be able to go up and then target the next resistance here. Okay, and if we break above that too, then we are likely to go up. And the moment we are breaking above this high that we identified already, it means we are getting a second break of structure, and therefore this whole downward trend has changed to an up trend. Okay, so these are basic things that you have to understand and know how to do them or use them to help you. But we are not learning trend lines today. I only brought it in quickly. So we are seeing that this space is in a downtrend. Okay. So what is the last high? So price from this high, price gave us this area, this low here. Did it break here? Was it a break? Yes, it did not really close below it, but it's like relative equal lows here. Yeah. So from this area, okay, from this area, price dropped to give us this area. And so within this range, from this high to this low here, price pulled up into, let's see, it pulled up above, a little above equilibrium to 61.8% and then sold. That's why I was telling you, most often or mostly, you will see price. This is like a bullish move, sorry, bearish move. So above the 50% is premium where you should sell. Okay, so let's see from this range alone, price pushes up into 50%, between 50-61, we got a nice move to the downside. Then it moved up again to the same area. We still got a sell. Then it pushed up into the same premium zone. This is 76.8%. Then we got another strong push. Okay. Now, once price is now below this area and these areas, these are zones for looking for buys, because when we had this low here, it created for us a new range from here, top here to down here. So it gave us a new range. This gave us like a new range. Okay. So around here is like below 50% discount. And that's why we got this sell, this buy to the upside. Okay. But whether we will get another buy to the upside right now, we don't know. Okay. So is part of why we are using this pair as a case study. So what I want us to find right now is, what was the last low before we got this, the last high before we got this low. So I can see that high as this area. Are you all, I mean, this area, am I correct? Because we see that drop to this area and a push to the upside. And from here, only from here, we got this break of structure here. We got this break of structure here. Can we see that from here? Price broke this low, which is break of structure. So from what we learned, anytime there is a break of structure, what do? We use that as a range. That is our swing range. Okay, so from here to here is our swing range. Okay, our swing range. Then price moved back into premium here and it sold. But I told you when it sells and comes back to take out that high, what do? It means your stop loss is hit because if you want to sell again from here because um, it's still at premium. This one, you got a first sell to here. You made some profit. But when it moved back up, it swept all of you. So stop you out. Okay, so it stopped you out. Now, after it stopped you out, what happened? It dropped here. So I told you that you see price drawing back into the same zone, giving you, if you're still holding your trade and did not close, it gave you an opportunity to close on break even. But we were as we thought that we have had a break of structure to the upside. But once it made the intention to go up again from here, it rejected and then rather continued down. Okay, so what does this tell us? I was telling you that the ideal thing is that we have a break of structure, price should move into this area, and we should expect a new low. We should expect a new low. But in real life situation, it might come up and take out that high. And then once it take out that high, it will now give us a move to the downside. Okay. So that is what we called it price used this area as liquidity. So we will find we have to be able to know what is liquidity and how to really identify liquidity. How or why, how is it that we should position ourselves so that price or the market will not use our entries as liquidity? That is the most important thing for us to study or find in this market. When you will not be used as liquidity. So if you were selling from here, good. First, you got a good sell. But if you were holding the sell, thinking that price has come into premium, so you are selling to target a new low, it's price used you as liquidity. So why? Why did that happen? We need to find out. Okay, so we are not going to study liquidity full. We will study that in another session to understand and how to identify. But one thing we can know is that anytime there is a resistance or a support that is being tested many times, there should be liquidity above it. Anytime there are equal highs or equal lows, look here, equal highs or equal lows, those we call double bottoms and all that. You see, there's liquidity. Anytime there is trend line and trend line is being tested multiple times, there is liquidity. Price will definitely break into it to take out all the stop losses below it. Those who want to sell because price is breaking to the downside, then it will reverse. Okay, it will lock all of you or all of us up. Okay, so this is one area to identify liquidity. Okay, liquidity when there is relative equal highs, like here. So it came down. If you sold here, where would your stop loss be? Your stop loss would be above here. So it gave you a sell good. If you did not close profit, it pushed up to stop you out. And now came here. You are not wrong with your analysis. Just that the market has been built in a way that the big people will manipulate and take the smaller people their money before the bigger moves will happen. That is the way the market is. So what if you learn to understand the market in that way and then always expect such things to happen? Then you can make profit from the market. So what if you will be selling after that move has happened? So anytime you are selling or buying and you see that above you or below you there is um, equal highs or equal lows, you should be very careful. Okay. So after taking out this liquidity, price hit this area, drop back into the same area, retested, and boom. So this move broke this low here. So this is the current range for us to deal with. So we have another break of structure here. We have this high, which is our new high, and we have this low here. That becomes our new range. And we can use the fib from up to the down here and see. We will expect a pullback into above 50% or on 50%. This one gave us 61.8% here. Boom, 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 and gave us a new low. Okay, let's see, we had a new low. So with this understanding alone, we could have caught this entry here and then sell. Our target is just this low. Once it hit here, we are out. Okay.
Please, I need to. Can I ask one question, please?
Yes, please.
I want to understand something about that liquidity strip that you just explained. Please, can you just make a retouch?
Go ahead. Ask.
Okay. You know, the liquidity strip from that area that we have equal lows.
Okay.
And from the other side, we have this that break the equal lows that we have on
Mhm.
the yes in that area that break the equal lows. Is that if we enter any market from this what is it called? The equal lows that we have here,
Mhm.
and they now use that one to take us out. Is that the explanation of the liquidity strip you just
If they use what to take us out.
if you know from these equal lows that we have,
Mhm.
assuming we make an analysis and we feel like okay, we want to sell from this market, you know, we enter a sell from this low
Mhm.
that you draw this is here this our resistance here that you have here.
Yeah, I hear
This equal low. No, I mean this other one, this long one.
this one.
Before this, no, the one to the left. Yes, the upper side.
Here.
The
Yeah.
upper one that you draw, that long one that you draw, the upper one. No,
Yeah.
just the area in which you remove your cursor. This long one. No, not that side, please. Move to the left. To the left again. Yes, the uptrend line that we have, this range, this line that marks the equal lows.
Here.
Yes.
Uh-huh.
As we want to sell from that area,
Mhm.
you know, we are targeting the range to enter our sell. And this buy that happened after the little sell that happened, so
Mhm.
take us out. Yes, to
Mhm.
that area.
Mhm.
Yes. Took us out of the market. You know, probably we were targeting the next low for
Yes,
our
yeah.
tip. Yes.
Yeah.
And you know, all of a sudden the market turned back to take us out, eat our SL, and you know, we run at loss and
Mhm.
as well lose our profit. Is that the liquidity strip you are explaining that will
Yes.
sweep out?
Yes. So what I'm saying is that the original context for this setup started from here. So that is why we are learning the context. Started
Okay.
from up here.
Yes.
Yes, because this is the last high
Yes.
that broke this first structure here and gave us this area. And from here,
Yes.
we pushed up into here. Okay, so though this area also gave us another break to the downside, the main context started from up here. Do you get my point? So
Yes. I'm
in
getting.
the first place, our framing for this cell was here. But we have to always keep in mind that this is the main source.
Okay.
And so we failed to keep in mind that this is the main source.
Okay.
Okay. So we framed our setup from here because we saw a break of structure. That's why not every break of structure can, especially if you want to go in a long position. This is like a scalp, like a short trade.
Okay.
Though it's on
Okay.
daily 8 hour time frame, but it's a
8
scalp.
hour time frame.
Yeah. So always look at the bigger picture. Always look at what is above you or below you and see if you are not inside a place that can where you can be used as liquidity. Okay. So yes, we were right. We had a break of structure, so we expect a pullback into premium and we sold. But in the first session, I told you once you sell and price does not make intentions of going down to give us a new low after break of structure, that should tell you that something is going wrong. So what is going wrong? Are you going to be used as liquidity? Look above you. Go to the higher time frame. If you're on 15 minutes, go to 1 hour, go to 4 hours, go to daily. Is something above you? Now, when you saw price reversing to the upside from here, okay, and you have not set stop loss, you have not closed your profit. It kept coming, coming. We will learn later what how many candles you should see. That should tell you that you should not hold your trade.
Okay.
Okay. So probably the basic thing I would say is if you see three candles on a row closing above or below each other on any time frame that you are using, start rethinking. There might be a major pullback that is happening. Okay.
Okay.
If you see three major candles on a row, this one close above each other, close above each other, it's likely price will want to come to your entry. Okay, so but the moment we start, and all these things comes with experience. The moment you start seeing that happening, you have to be thinking of your entry. So now look above. Oh, okay, I saw that the actual framing of this whole range from up here to down here started from up here. So you use your Fibonacci to measure. Then you will realize that this initial pullback here we used is even around 61.8% if you measure the whole range around here. So it's likely price will use this area as liquidity to come into 78.6% or even 100%. And all these areas are still in premium. So here there could be sales, there was. Here there could be sales, there was. Okay, but a better sell is here. So price used this area as liquidity to still push up into the premium zone. A more higher
Okay.
price, a more higher price before they release the sell. They took all the money before they released the sell. Do you get it?
Okay.
Yes. So that is the meaning. So the meaning is that find the right context for where you are entering your trade
A
at.
nice entry. Okay.
Yes.
Okay. Okay.
So that is
Thank
what
you.
we are learning. I think we have to go for third section. So uh, the Zoom is giving me short time. When it ends, I will send a new link quickly. This time it will not take time, and then you can all join again. Then we do the third session before we close for the day. We need to finish this. So now we have a break of structure, and then price. pushes to this area here and then retrace back into 61.8%, which is premium. So when you get stopped out like this, one, unless you are aggressive and you found that okay, we are still within this area. Okay, some people get stopped out here and then still sell here because they know we are still within premium. Okay, and they will recover their money. But within this context, this is the best area. If you are stopped out here, you wait. Now it broke structure again and gave you the opportunity to recover your money. So you sell from when price comes back into premium in this new range. Okay. So when you sell, you just target the low and it gave it to us. Okay. Even when it came to 50% and you start selling, it will put you in loss, but not too much. Eventually, it gave you. Okay. So once the setup is ripe or your range is correct, and that is what the market is using at that time, there is no way you will not make profit. Even if you go into loss, you will make profit. So that is what we need to find. We need to find what the market is doing. Understand, is the market going to do this or not? So now that we got this low and we have been able to take out this low and hit here. Okay, so now for me, this taking out this also looks like we've taken liquidity. We've taken this low, previous low. And let's know that there is an all-time low resting below here. Okay. So, two things. This area can be used as liquidity. Okay. This can protect this. So this can be used as liquidity. We sweep it and we move up back into the range. Once we get back into the range, which is inside this trend here, then it means we are using this as liquidity. So that is our confirmation. So how do we get a trade here? We need to find on the time frame we are using. Okay, we need to find. So let's see. We have this is the 8 hour. We have this 8 hour candle push low. We have this candle push up to the equal level of this last 8 hour candle, and the new 8 hour candle is pushing down. If this 8 hour candle pushes down to take out this low, we don't have a trade, any confirmation. But if this 8 hour candle pushes up and then closes above this area, okay, it means that the 8 hour candles have engulfed this pattern here. And this is engulfing candlestick pattern. And which means on 24 hours or on daily time frame, we would have had this daily candle closing above yesterday or previous candle. Once that happens, our next confirmation is to wait for, this big daily candle that pushed down, the high of it. Once the next day's candle also pushes and engulfs that around here, this is a very big confirmation that we will go very long. And when we are going long, where are we targeting? So what is the main source for this trade? Okay, so this and this are liquidity. Notice that this trade gave us from 61.50. This is liquidity. For this source, 78% is around somewhere here. So even if we have a new sell, we should have it from around this area. Okay, so I don't worry about here. It will sweep this. Relative equal highs. Okay, it will sweep this. So if we get this confirmation here, the target is here. And if this area and this area, if it touches here, there will be a reaction. Okay. Whether that reaction will bring price down to this area, I don't know. But up around here, I can get out of this trade. My TP is set. Okay. My TP is set. If it comes down and does not give us new highs, we will definitely find another entry. It means we are going to go much, much, much more higher. But for now, we can just look at this. Okay. Now, what is the next option? So we need to wait 2 days or 3 days to see if this will happen. Okay. To see if this will happen. Now, the next thing is that after taking out this low as liquidity, if price is to push to the downside and take this protection, take this out, because from this low, price moved up and broke this structure, it dropped down. This area that it hit was a break of structure for this. Also, so we don't expect this low to be taken out. But if it is taken out, it's going to be a total sweep of liquidity for all those that are using this break of structure to buy from here. And they are holding their trade till now. If it sweep it, this will be those who bought from here, this is their stop loss. So if it sweep to take it out, then it means it's stopping everyone here. And because they know it's going to go long, they are stopping everyone. So once we see price break all of this area and then moves into the range again, okay, moves into the range again, moves into the range again, moves into the range, takes this one out, moves into the range again. Let's say it comes up and hits somewhere here. Okay. So on a discount area that price will drop to, that should be our confirmation to go big. This time it's going to be very big because we swept all the liquidity. I hope you guys are getting me. So we are trying to combine market structure and little basic understanding of liquidity to see if we'll be able to understand the way that the market is moving. So for now, we have to only monitor if this pair is going to use this area as liquidity to move to the upside. If so, we don't trade yet. We don't take the trade. We have anticipated the setup, but on the higher time frame, the confirmation is not yet in. But we have anticipated it. Okay, so we have to wait. We have to wait. We took out this area, so we have to wait. If price will keep going to the downside, if it takes this low here, it will definitely push back to give us an opportunity to go bearish again. It will push back up into the range and give us opportunity to go bearish again. Okay, so let me see. This is 15 minutes on 51S. This is a setup that I've taken. So let's see quickly. Price from here, from this range, let's see, price drop to take out all these lows.